back again, all you capitalist pigs. My name's Jason Stapleton, and this is the Forex Market Preview. Let me adjust my mic here. There we go. Now, I have been this week engaged with our mastermind group, with our mastermind clients who've been here in Kansas City. It's a 2-day long closed-door meeting that we hold with them where we discuss any number of secret things that you don't get to know about. That has now come to an end, and of course next week we'll be hosting the Meet Me in Kansas City event here, which is the Pro Trader Clinic that we're running for a full week. So we'll have a bunch of traders in town for that as well, and we're looking forward to an awesome week of teaching and working with these guys and doing a lot of live trading and a lot of classroom sessions in the afternoons. So with that said, I say all that to say my analysis this week is going to be pretty quick because I haven't had time to prepare the way that I normally have. Now, I've taken some time to give you guys a little breakdown based on some of the news events on the dollar, on deflation, on inflation, and on quantitative easing. And I'm going to talk a little bit about the velocity of money, so I'd highly suggest that you read that. Now, however, before we kick off the analysis here, I do want to remind you guys, many of you were part of the systems training week that we held last week online. For those of you who are interested and who saw that, you have less than 24 hours to sign up for the Liberator and the dynamic support and resistance levels, the DSR indicator stuff that we did. Now, we spent a lot of time in the mastermind group showing the DSR indicator package and how we're using that internally at our offices. So if you guys have not had a chance to look at that, I've included a link underneath the video for that. Okay, that's all I'm going to say about that. Enough said. Let's go ahead and get into the charts. I want to start here with Aussie dollar. And if you guys will remember last week, we talked about the break of structure that happened right here. All right. Let me just grab my box tour. It happened right here into the close of last week. And then, or into the close of the last Forex market preview. And I talked about a sell right around here back up into previous structure resistance. So if we look right here, you had previous structure support, which should now become resistance. Now, we came a little bit higher than that. I ended up putting out to the syndicate that I did sell right there. But if you remember from last week's Forex market preview, I also said if we came a little bit deeper, I'd sell again. Well, we did actually come deeper. I did sell again, ended up covering about half the position on a retest, and then being taken out on the balance of the position for just a hair worse than break even. So lost a little bit of money on that, but I didn't lose much because of the way I played that. Now, in the private client group, and I know if you guys aren't familiar with how we break this down, I've got a couple of different groups that I work with. I work with the syndicate, which is basically something that Akil and I do together. Akil runs our ratio trading room, where we put out some quick ideas and just give some general trade stuff that we're looking at. And it's basically a way, if you like the Forex market preview, to take kind of a little step. It's pretty cheap to be part of that. Then I have my private client group that I personally work with every week, a small handful of traders who come into that. So based on the detail level that we get into, I do different things with different levels of the traders, and they get a little different stuff. So basically, in the private client group, we talked about exactly how I traded this and why I did, and we get into a lot of very specific thought process when we start talking about this. But what I want to show you guys is that we had a little head fake here where the market rallied all the way back up, ended up breaking structure, or I ended up breaking above the highs, which is what stopped me out, and then immediately reversed and rolled over again. Now, most recently, we have broken the previous support level. And we've come back up in to retest previous structure support, which should now become resistance. Now, what is really critical to look here, or to understand here, is I want you to look left. Structure leaves clues, guys. We always want to look left. And look at what we've got. Look at where the next structure support level is. The next structure support level is right here. Okay? The next structure resistance level that we might consider is right here. So we've got quite a ways here that we can move. The market could move all the way down to 103s and could get as low as 102s. There's a nice healthy move here that we're going to want to watch for. Now if I draw some Fibonacci's in here, I'm going to take Fibonacci extension, and I'm going to invert the last leg of this move. Now, if you don't understand what this is, don't worry about it. I just want to take a look. We're about into the 127 extension. 1618 comes in close to that 103 level, but not a lot of ratio confluence there. If we take another Fibonacci extension, run swing high to swing low, and back up in. Again, not a lot there. You're not even going to have a 1414 there, which would be the other Fibonacci we looked at. So there's not a lot right now in terms of Fibonacci levels that we can look to for potential buying opportunities around here. So what we have here is a trend continuation trade, and what that is, guys, is we're now looking at a break of structure. So the market is showing an intention. It's tipping its hand, so to speak. And when we talk about the market tipping its hand, some people like to wait for the market to tip its hand. This market has tipped its hand. It says, I intend to go lower. And the indication of that is, look, boom, we've broken structure. The previous structure support level has been broken. The market has come back up in to retest that previous structure support and has found some resistance. So now, shorting opportunities, 104.20s, looking for 103s, potential follow-on targets down to 102. So you guys play that out however you want to. I'm just telling you, we talked about Aussie dollar over the last couple of weeks and why I felt more and more bearish on it, and now we're seeing the technicals turn. It's really choppy, but we are seeing some technicals turn. So until we get some violations of some structure to the upside, mainly looking right here, again, just look left for the structure. It will always show itself. Resistance, resistance, resistance. There's a resistance level there. If that resistance level is violated, we get a break above, close above. The initial highs back here. We're going to be looking for now long opportunities. It means that, A, the short position was short-lived, no pun intended, but we got a little bit of a break. There was some opportunity in there. Maybe you made some money, maybe you didn't, but now we're back into bullish momentum. We don't know how long this lag is going to last. It could be a major correction, could be a very minor correction. But looking at the structure, the market is telling us we need to be short. So that's that on Aussie dollar. Let's go euro dollar. Let's talk about that for a minute. Now, we ended up, I told you last week we had potential Gartley pattern in both directions. We had a Gartley pattern going north, which was going to terminate somewhere around previous structure resistance right here. Okay? And we had a Gartley pattern to the south, which would have terminated somewhere around here. Okay? Somewhere around there. So I said, basically where we were right around here at the end of last week, and I said, I don't know where we're going to go. If we go north, I'm going to be selling here, and if we go south, I'm going to be buying here. I was basically looking for a way to channel trade this. Well, I got beat up on this one, ended up getting taken out very quickly from the time I got short back up into the resistance level, and this was a broken Gartley pattern. This thing didn't end up making me any money. It cost me some money. Now, here's the nice thing about this. Is there is a way to play this. So for you guys who are looking at this and saying, I got chewed up on the Gartley pattern, and man, that thing was a loser. There are two things that we know about Gartley patterns. Number one is that D, the D completion. And for those of you who don't understand this stuff, don't worry about it. Get involved with a syndicate. I'm holding an international trader workshop very soon. I'll be letting you in on. It's free. It's a week, and we're going to be covering this stuff in detail. But if you do know what I'm talking about, I'm going to talk very quickly here because I don't have a lot of time to do the analysis. D will always, one thing we know about Gartley patterns, D will always complete inside of X. So if this is the X to A leg here, okay, that's X to A. That means that the completion, the pattern completion, is always going to be inside of this leg of the move. Okay, so for example, I'm just going to draw this in, and I don't have my, normally I use hotkeys, but for some reason I don't have them. I'm working this on a Mac, so that's why this doesn't work. So on the Gartley pattern, the D completion will always happen within this X to A leg. So I ended up selling right here, and then that was violated. Previous structure resistance, which was right here, was defeated. All right? Now, what do we know about this? What does it tell us about the market? Well, it should signal to you that we're now into trend continuation. And if you're a ratio trader, trend continuation, you're going to get beat up when the market's in heavy trend. the advanced pattern formations work very well in consolidating markets. They don't work real well when the market is in heavy trend. So there is a way that you can then turn around and get right back in this position, and it is right here. Previous structure resistance, once broken, boom, broken here, should then become support. And look at what happened. Market rallied, it pulled back into the potential reversal zone, into what I call the kill zone, and it gave you a buying opportunity. And then that buying opportunity, boom, rallies from about 124.40s all the way up to 125.80s. You would have made back everything that you lost on the Gartley pattern plus had you taken that trade. So there are ways, and one of the things that you can do as a trader is you can write this into your rules. You can say, hey, if I get broken out on a Gartley pattern, if a Gartley pattern is defeated and I'm stopped out on that trade, I am immediately going to look for a way to get advantage and take advantage of the trend. Because now the market has proven to me, as it's shown to me, that it intends to go higher or that it tends to go lower, that we're back into trend continuation. Now, I ended up shorting this last week, and I ended up shorting it right about here. Okay? This went out on the Facebook fan page. It went out to the syndicate. I basically showed everybody that I was taking this position. Don't normally do that. But I figured, what the heck. I'll just throw it out there for everybody to see. Now, market ended up spiking a little bit higher. Now has rolled over. I'm well into the money on this trade. And my stops are back above this spike high over here. Because what we have here is a very busted kind of Gartley pattern. And we have a 3 drives pattern in here as well. So if I take my line tool and I draw my line tool in here. And then I copy it. And I paste it. Draw my line in there, I paste it again, and I draw my line back here. You guys are going to see equal distant moves all the way back up into an area just short of these previous swing highs over here on the left. So I got a 3 drives pattern up into an area. If I bring in my Fibonacci retracement, go from swing high to swing low, you're going to see that that also comes in right along a 786 retracement of this would be the X to A leg here. And then, of course, if I bring in my Fibonacci extension, just again looking for ratio confluence, the last leg of the move, you're also going to see a nice 127 extension right at that 786, giving me a very nice potential reversal zone. And of course the market's right in there. So that's what we're looking at. That's what those of you saw who are syndicate members, those of you who are in the private client group. This is just a refresher for you and just kind of showing you some of the analysis and breaking down the charts. Now, we did in the private client group a very detailed analysis of this particular pair. I really broke this down and showed these guys the thought process behind this trade. And again, if that's something that interests you, if you're watching this this video and you'd like to know a little bit more about the thought process that goes into this, and if ratio analysis is something that you really enjoy doing or that you think you can get a lot out of, then certainly you can look at one of those. But again, there's one more I want to look at. I want to look at the pound yen. If my charts will roll over, for some reason they don't want to, but that's okay. Let me see if I can get this. Fibonacci retracement, swing low to swing high. I'm looking for 382s for target 1 on this and 618 for target 2. So for those of you who are interested in looking at this, actually, we got to go all the way from here. Boom. I'm looking at a 382 right around 123.80s and 122.50s for target 2. So what my expectation here is that this market will come from the area where I sold to my target 1 and then hopefully hit target 2 as well. And as you can see, structure resistance right there, structure support at the 618, giving me a very nice trading opportunity there to the short side. Moving over now to pound yen. This is one that we look to sell for an advanced pattern here. We got a little pop up to the upside, and now the market has pulled back. There is an opportunity for some trend continuation here, assuming that the market will come back down into roughly right here. Make this fatter. Set as default. Apply. OK. We get the market back down into here. You can see a resistance level 2, 3, 4, 5. There's just a lot of resistance right along this level here. If I bring in a Fibonacci retracement and I go swing low to swing high, that's going to be about a 50%. If we come all the way from the bottom, it's going to be right at a 382. So there's a potential trend continuation trade here on the 4-hour chart. This has been a, this was a really tough back and forth market, and then we broke out into trend continuation. So my expectation here is that that won't end, that we will come back down into a roughly a 382. We'll retest this shelf that the market was sitting on for a long time. And you can see, even when you consolidate your chart, you can see how the market kind of pivots. There's kind of a natural pivot in the market where, hey, we're either under this level or we're over it. And in this case, it's been playing heavily under that particular level. So what we want to do now is we want to play this to the upside, and maybe we'll get lucky and catch a spike and a runner. Because, again, just consolidating our chart out just a little bit more here, you're going to see, come on, you're going to see that once we get above this level here, which is just above the resistance level that we found previously, then we've got a long way to run here. We got a bunch of little levels in here, but really, I mean, back up to 132s we could run. It could happen. So again, there's a lot of opportunity here to the upside, and underneath this level going to be kind of choppy. So anyway, that's pound yen. Now, guys, I know the analysis this week was not up to par. Again, it's simply because I haven't had time to be in the markets the way I like to be, and I haven't had time to prepare this lesson like I normally do. However, next week the group will be gone. It'll be back to business as usual, and I will see you guys right back here for another Forex market preview. Now, make sure you read what I wrote about inflation and the velocity of money, because that's going to directly tie to next week's article that I'm going to write to attach to the next week's video. So, till next time, guys, good luck and good trading. I'll talk to you soon.